What's up, everybody, and welcome back to another episode of the Arizona Monthly Housing Market Update. I'm Katie, and
I'm Matt, and
I am Ryan. Welcome back, everyone.
What's up, team? Welcome back. I love this time of the month where we can talk about the facts, talk about what we're seeing in the market, talk about what's truly going on. What I love about this team of three here is we are busy professionals. So we are out on the street. We are talking to people that are really dealing with what is going on in the market right now, and we bring that to you. So let's get started right now like we always do. Ryan, you're up first. Let's talk rates, my friend.
Yeah, wow, it's been a busy 24 hours here. So today's market update is very timely. Yesterday, April 2nd, we got the long-awaited tariff announcement. So, very few knew exactly how this announcement was going to go. Tariffs could have been put on hold, or the original proposed tariffs could have been reduced, or they could be higher and more sweeping than expected. And really, what we got was the higher and more sweeping tariff announcement yesterday. President Trump announced sweeping tariffs of at least 10% and even higher for some countries. For example, 34% on tariffs on goods from China. So because, the tariffs were more aggressive than initially expected, we are seeing a sell-off right now in U.S. and global stocks. On top of this, this week we're starting to get some of the jobs numbers, and we are seeing a little bit less hiring, and some of the GDP estimates are signaling that we're possibly going to be in a negative. And if we are 2 quarters in a row, that could be indications of a recession. So, but going over that, the positive impact of all of this really is mortgage rates. When there's uncertainty and concern about where the economy and if spending is slowing and money is flowing out of stocks, they go into bonds. And this really helps lower interest rates. And we're seeing them right now really improve today. This morning has been a big movement, and we're seeing them kind of drop to where they were near October. So it is positive news for the housing market, because, this should really motivate more buyers to get off the fence just in time for the spring and summer buying season. So that's what we're seeing right now.
Yeah, absolutely. I think that has definitely made things a little bit busy for us, hasn't it, Ryan?
It has, yes.
We are answering a lot of questions out there, because I feel like, the average homeowner has a lot of questions about what's going on with the market, where are rates going, where are prices going, and how is this new news going to affect us? How is it going to affect building? How is it going to affect, all of the things that we consider important in terms of just being an average, regular old American out there looking at buying a property. So Matt, this is where you come in. Talk to us about word on the street. Like what do these tariffs mean to us?
When we start to really dive in and try to understand what the tariff's going to represent, clearly there's a definition. It's going to ultimately be a form of a tax that we're going to be charging other countries for their goods, just like they charge us. And a lot of countries do. And I think, obviously, this is a very, very big political move. So trying to really understand how this is going to affect us is much like a lot of the topics that we've seen and have been navigating over the last 6 months, especially during this election time. Clearly, I think a lot of people are nervous, just because if you watch the news, there's really not a lot of positives about it. And then, of course, the real-time reaction is what we're seeing in the stock market. And the stock market took a pretty big hit today. So it's pretty natural for anyone that's not engaged in this, especially at a high level, not to say that I'm even close to that, to have a little bit of skepticism and be nervous. Mm-hmm. Now, one of the things that I'm seeing still a great level of confidence as far as the consumer goes. People that I'm talking to, especially active buyers, there's really not much happening in their lives to make them change what their focal point is on purchasing. And I think that's like the most important part of this. We see these changes happen all the time, whether it's something that's not controlled by our government and something happens. We always seem to get knee-jerk reactions of sometimes overreacting. And of course, media loves that. And, I think a lot of powers like that. But I think it's extremely important for people to really just keep focused on their lives, on the things that they can actually measure. And that's going to be their job, their income, their savings. You know, if you start looking at your 401ks and stuff like that, and you look at them daily, you're going to be bipolar in a sense, because they're always going up and down.
Don't do
Whether it's when there's an announcement of tariffs or whatever it's going to be, there's always volatility. Now, to what Ryan was saying, I think from a real estate side, I think this is one of those kind of necessary steps that the silver lining is going to be with rates.
Yeah.
And that's one thing a lot of consumers, I think, are really, really, really wanting to have lowered, whether that means it's their credit cards, their home loans, their auto loans, everything that has to do with that. And what we're seeing, and I think there's a lot of people there that are optimistic, especially our Treasury Secretary, is very much speaking to the sense that we are going to see relief in rates. Right now, we're seeing a bunch of confidence when it comes to real estate in the luxury market here in Arizona. That right there, if people were really nervous of this being like the ticking time bomb that's going to end it all, he made this announcement of tariffs, and campaigned on it. And, the actual hard announcement was almost 30 days ago. So if there was really going to be a lot of like, holy smokes, this is going to be the end of game, we would have seen a giant reaction in our markets leading up to this, especially on Monday. The stock market actually was fine on Monday. It responded positively. Our housing market, once again, in the luxury section, we're talking about a lot of, highly educated, experienced people that are buying these level of homes. They have businesses, their whole lives are invested into this. And if all of a sudden there was some fear on that end, I don't think people would be buying $5 million homes at the rate that they are in Arizona and across the country. So I think the biggest thing with this is just to remain positive, obviously focus on your own world, and don't kind of take your eye away from the ball, especially what your own goals are.
Yeah, I completely agree. Thank you for that. Luxury sales have certainly been strong. Do you anticipate any fluctuation in luxury sales now that the stock market's kind of fluctuating a little bit? I mean, I know you had some positive things to note there, but there is a bit of fluctuation, right?
Yeah. And I think, we're going to have to see what the volatility does. It's so soon. Today was the first day after the announcement, the first day of an actual market being opened. So, are we really going to learn that much in 24 hours? No. Do I think that this was strategically placed to, be announced on a Wednesday evening? Yeah, of course. I think everyone making these decisions aren't just, arbitrarily deciding when they're going to drop this huge amount of information. No, they know that markets are going to have, today, tomorrow, to respond and really kind of see what's happening. Then we have the weekend. I do think next week's going to be a really big telltale on where people's comfort's going to be with expected volatility. And I think there is some confidence there, but we're really going to be able to really see what's happening next week. And that's going to be the big indicator. Is this going to be something that's going to have, extend into the summer, or, and how hard is it going to be affected? The other big side of this is, with our current president, he's said it with words, and we've seen it with actions, where tariffs is not only, as he says, a tool that can be used to positively help us in our country and its position, but it's also a word that's a great frontline tactic in negotiations. And we've seen this happen already. We've seen what he did with Mexico and Canada, and how things responded, and really pumped the brakes on that and backed it off. And I think there was a test there to ultimately see how the economies were going to respond, to see what level they were going to roll out yesterday. That's just my thought. I don't, when it comes to any president, do I really think that they're trying to ruin the country? No. I do think every president really does have what they think is best for the country and its citizens, and I do think that's the case here. And I think we're really going to see that soon. So.
Yeah, totally agree. And as we get closer to summer, just piggybacking on the luxury market a little bit more, we always see them, luxury sales die down a bit in the summertime, as we see in the regular market too. So we definitely have that coming, guys. We definitely have to, just understand that summer is coming and things might slow down a little bit more, than they have. I do feel that it's been a bit of a slow spring season. And I know that it is due to inventory levels. I mean, we are at pretty high inventory levels. We have not seen this in quite some time, right, Matt? I mean, you do track this week to week basis. So what is your feeling on that?
Yeah. And I think as far as inventory goes, we are in a buyer's market slightly in most of our cities here in Arizona and in areas. But it's not a deep buyer's market. It's something that could literally shift. If all of a sudden rates drop, we could see that change in a 30 to 60-day period very quickly. Yeah. I think it's just that we're seeing a lot of the same. I think, you have people that have these very low rates, and I'm sure, Ryan, you're seeing this, and when you're talking to them and they're starting to kind of put their toe into exploring what purchasing a new home might look like on the balance sheet as far as, their expenditures go. And I think when things like this happen, all of a sudden, a lot of people that have these low rates just all of a sudden say, you know what, I'm just comfortable with this low rate. And they kind of take that off the board. And all that does is just keeps our inventory low. I do not see a bunch of inventory being added because of all of a sudden, let's say the real estate market is affected. No, because there's so much equity in homes and so many people have low rates locked in. We're just going to ultimately see whatever does come to the market is just going to be a distressed product. And it's just going to kind of keep doing what we're seeing.
I totally agree. I do think that sellers need to be prepared, like we've been saying for the last couple of months, to be negotiated with. Yeah. And I think they need to be prepared to, really look at the details, really look at the facts, the numbers, the way the market is headed, the projections, and not only the comparable sales. Because what we often will tell people at listing appointments is that the comparable sales do tell some of the story, but it's not the whole story. Yeah. And I think that oftentimes people get real hung up on quote unquote comps. And those comps could be, 3 months old. And then what does that tell you? Well, that was negotiated 4 months ago. And 4 months ago was a different market than we're in now. So I think it's really, really important to pull in all of those details and make sure that you truly have those numbers and really have your finger on the pulse of what's going on in the market now. And I feel like you can't do that unless you pay attention on a day-to-day basis, because things do change. And they change, like you mentioned, they can change really quickly. I mean, I think we had 3 different markets 1 month last year in 1 month.
So you got to have the right team on your side, right?
Yeah.
Agents that are plugged into the market, know what they're doing. So like Katie and Matt.
And Ryan, are you noticing anything as far as an increase in appraisals coming back low? Are you seeing just a lot of values coming in? What's your take on that?
Not at this time. Yeah, we've gotten about a dozen appraisals over the past 2 weeks. We saw most come in right in line with the purchase price, a few over. We only saw one that came in low right now. So far we are seeing appraisals supporting the values. Are you guys seeing that as well?
Yeah, I haven't had a short appraisal in a while.
Yeah. And that's one of the indicators that I kind of look at, because you got to think about really, who's on the forefront of all of this, and that's going to be the banks that are lending this money. And what is their confidence level on this? And especially when they are saying, hey, we're taking less than 20% down on a lot of these programs. There's a lot of risk right there for the lender. And, a lot of people don't really understand who the appraiser's protecting. And that's what the appraisal is there for. It's to protect the lien holder, the bank. It's, you're the buyer and it's there to protect you in a sense, but it's really there to protect the bank. And if the bank is sensing that, hey, we're in a market that, whoa, we're seeing some things that are really scary, they also have the ability to have those appraisals verified by their underwriters, and those underwriters can call issue. And we're not seeing that. And so I feel like if there was a true concern with something really looming on the outskirts of, this is something we're going to see where there's going to be a big increase in inventory and we're going to see a drop in values, I really think that'd be the first place that we'd start seeing things.
100%. And I love that you said that about banks. They're factoring in other data, not just comps, right? When they go out there and they do their appraisals and they approve their appraisals, because it does have to go through underwriting, right? Like, Ryan, somebody double checks those numbers too. So it's not just, however the appraiser's feeling that day. Like, that has to line up.
Yeah, they have their own, I call it like a Zillow on steroids. It's called an AVM, where they really decide what the value should be. Sometimes we even get appraisal waivers when, Fannie Mae or Freddie Mac say, hey, we feel like this value is supported. You're putting enough down. We don't even need an appraisal. But yeah, underwriters do a lot of digging as well, just to make sure that the report is within, estimates of what their system is showing. So yeah, and we're seeing a lot of appraisals come in like right at the purchase price right now. So that's encouraging.
Mm-hmm. I just got an appraisal waiver in this market in Desert Ridge.
Yeah, we're getting a few as well. Absolutely.
Yeah. Very, very hot area there. So, like we mentioned that at the beginning of the show, we are in overall a buyer's market. Excuse me. But there are some pockets, guys, that are still moving and still very competitive. Specifically, and Ryan, you can probably speak to this, specifically the $200,000 to $400,000 market for single family homes.
We are. That's
right?
an area that we're seeing a lot of. There's a lot of first time home buyers kind of coming off the fence right now, and that is that that they are seeing that there's lower rates, especially after today. We're getting a lot of calls this morning, and on top of that, some more inventory, which is great for buyers, that they have more options right now, especially in those kind of 200 to 400 price ranges. So yeah, we're seeing a lot of activity right now.
But on the other side of the coin, look at activity 400,000 and below in the townhome and condo market. Mm-hmm. And you're seeing it a little bit slower, right?
We are, yeah. And you factor in those HOAs, obviously, and that has a big impact on it, because that could really kick up your payment, even though the purchase price is lower. So I think a lot of people are taking a look at that and, going towards a single family option that has no or lower HOAs compared to townhomes and condos.
Yep, absolutely. That's something I noticed in the data that I thought was really interesting.
Yeah. Well, and then when you look at the correlation of the products of as far as what if you were going to rent a townhome or a condominium, where is that rent going to align with if you were to purchase a home like that?
Right.
And you're seeing in that product a big difference. Rents are a lot lower than what it would cost you to purchase that, considering the HOA and all of those costs. So I think a lot of people are definitely saying, well, no, I'll wait to get a single family home. And then when the single family obviously are dipping down, that's where they're going to say, hey, that's where I'd rather spend my money. And that has to do a lot with just our own, the influx of condominium style apartment complexes. We definitely has seen a huge inventory pickup on that. So, on that type of product from a rental stance there, it's soft. But with single family residential rentals, it's holding strong. It's actually been ticking up. Inventory's been dropping. And that's one of the areas that I feel like just gives so much support to the really, really healthy underlying foundation to all this. Like, people are affording this. And it aligns nicely with rates almost where they're at right now, and especially if we get a drop.
Yeah.
So
one other last topic for me, but one other thing that I'm hearing out on the street there, and I just want to kind of debunk this from my experience anyway, and Matt and Ryan, you tell me what you're seeing, is I've had at least 2 conversations in the last 24 hours with potential buyer sellers. So they own a home, they want to buy another home, and they're going to have to sell their home in order to do it. And they're being told that nobody is accepting contingent offers right now. And I beg to differ, because we have several. And my advice was, or my response was, well, obviously it's a case-by-case basis. It depends on the circumstances of the situation, but there's a way to present a contingent offer. And there's a way not to present a contingent offer. So, obviously it's all in the presentation a lot of times. But I wanted to ask you guys, are you finding, like I'm finding, where it's not really that difficult to get a contingent offer accepted as long as it's presented appropriately?
Oh, absolutely. It just depends on the market. And like we've been talking about, we're shifting a little bit towards more a buyer's market and more inventory out there. So when houses are sitting a little bit longer, sellers are more willing to take it. So yeah, it just depends on how your agent presents it and everything. But we are seeing more of these get accepted right now with contingencies.
Yeah, totally agree. Matt, you too?
Yeah. I'd say it's I've seen it. I've definitely experienced a few that have said no. I also think it's kind of going to be more. It's going to depend price points.
Yeah.
And the nature of that home. Is it vacant? Is it occupied? And to your point, it's really going to come down to the experience that the agents have to be able to articulate, what the exposure and risk is, but what also is the benefit. And there's a lot of benefit behind contingent offers as buyers, as sellers. But the biggest contributing value to that is going to be your agent who can articulate this, and communicate it and highlight, the positives. And the biggest thing too is preparation. If you go into it reactively and not have, if you're a buyer that has a seller that has to sell a home and you're not even prepared yet, and that home doesn't have photos or a marketing plan and all that, of course the cross agent's going to be like, wait, you're wanting me to put all my eggs into a basket that I don't even know what it is.
Right.
Of course, their seller is going to feel that same skepticism and be like, no way. But if you're like, hey, this is the exact property, here's our comparative market analysis, these are our marketing plan, here's some photos, and you really package it, that's going to be a whole different conversation.
Totally agree. And the timing of it too is a big deal.
Yeah.
We have one right now where I have the listing and they have an offer out on another property in another state. And I got 45 days to sell my Santan Valley property. And it's a little bit slower in Santan Valley right now. Not going to sugarcoat it. Yeah. But we got it done. And guys, we closed in like 2 weeks and it was a pretty fantastic, a couple of times I was holding my breath, but pretty fantastic situation all in all from the bird's eye view. And it's going to work out quite well for them. And I have to say that it was all about working together with that 100%. Other agent in order for them to get their contingent offer accepted. It was really important.
Well done, Katie.
That's why I like contingencies. Yeah, great job. I think contingencies can be very well because, a lot of the sellers will get worried about who this buyer is and, is their deal going to fall apart? And that has nothing to do with me and that's going to affect me in my life. But now you have a buyer that is also in the same position. They're putting all their eggs in in the basket to move there and then theirs to move. So once their home sells, they're moving forward. Whereas if they don't have that contingency and a buyer might have an earnest deposit that's worth walking away from because a better deal came up, you have exposure there. Whereas with this contingent offer, 90% of the time, once their deal is good, they're moving forward and they're focused because they don't really have the time to mess around.
Yep.
So
exactly. It was kind of funny because I, obviously had a better presentation to this than this, but one of my comments was, Google me and my team. Because I think that it matters that you have online presence, that you have a track record that can be Googled so that people in other states, people who might not be necessarily familiar with our market can really see, hey, these guys have been around for, X amount of time. These guys have some longevity. They can get it done. And I think that that's important too. So
100%.
All those things. All right, guys. Well, this has been chock full of juicy bits this month, as it always is. I appreciate you guys so much. Is there anything else that you wanted to add about tariffs and rates and inventory and contingent offers? Or you think we about covered it?
I think we about covered it. My final thing would just be remain positive, especially if you're a buyer and a seller. If you're a buyer, I would also say really kind of start focusing, because if you look back in hindsight and you talk to any investor, and that's where most buyers that are trying to time things, they're waiting for the best time. It's usually when there's fear, and there's usually in these situations that in retrospect are always the best buy times. So it's just something to make sure. That doesn't mean that you need to go out and buy something right now, but it means that making sure that all your ducks are in a row. So when opportunity strikes, you're prepared. which those are the two ingredients to luck.
Yes.
I agree with that. That's great. And because, yeah, like before this call, actually, I had a couple people reach out to me and they mentioned that R word that I kind of mentioned before in the beginning, recession, and because that's being said a little bit more on the news right now. And, current first quarter gross domestic product estimates are showing a negative 1.4%. That's why that's kind of being thrown around there. The GDP is really the total monetary value of all the goods and services that are produced within the U.S. borders. So, they're showing spending is slowing and maybe the economy is slowing. So it's possible. But just remember, if we are officially getting into a recession, the good news is housing. Home values always do well during slower
during a recession
periods. Yes, yeah. Outside of 2008, which that was an anomaly because they were very risky loans that don't exist now. I know we covered that a few times, but home prices went up every other period where we had some uncertainty. Like Matt said, if there's fear and uncertainty, rates usually drop. And people start buying homes. So, it's obviously going to be very fluid. This is very early on with everything going on with the announcement yesterday. We don't really know how this is all going to play out. But if we do see a little bit more slowing, just know that buying usually does stay strong. And so do home prices. So just keeping that in mind, because I know there's a lot of fear and uncertainty out there right now.
Yeah, I totally agree. And I'm hearing it as well. However, a couple of weeks ago when I did the Cromford report, the monthly meeting that I do with the Cromford report, that senior analyst, she's amazing. She mentioned that recession fears are persistent, but they're not, and this is last month, they're not reflected in the analytics as of then. So, we always say this, that there's the national, what's going on nationally, right? And then there's what's happening in Arizona. So.
Oh yeah, and that's just a word, right? It's such a politically charged word too, and we've seen it changed from like inflation to deflation. Are we really experiencing deflation, or is it a recession? So it's very convenient. So I think that's why just focus on you, and that's the best thing that a lot of our clients can do.
And stay tuned here for the real news, right, guys?
That's right.
100%.
Stay tuned. No fake news here. All right, guys, if you want to check out what we've said in previous episodes, because we've been doing this for many years now, you can go back to our YouTube channel, which is at Team EvoAZ. That is our handle. Scroll down to the very first playlist. That is the Arizona Monthly Housing Market Update. You can check it out right there. Or if you prefer to listen to the audio version, maybe you drive around a lot, then on your favorite podcast platform, do a quick search for Arizona Real Estate Radio. There you will find us, download all the things, and you will never miss an episode of The Real News. We will see you next time. Bye, team.
Bye, everyone.